Have you ever looked at a financial chart and just felt completely lost in all the lines and numbers? Well, that's what we're going to do today. We're going to take one of those dense, complicated-looking charts and show you how to read it like a story. We'll break down what every little piece means to uncover the hidden narrative of a stock's past, present, and maybe even its future.
So here it is. This is an advanced technical analysis for a company called COALINDIA. Now, at first glance, it might look like a total jumble of lines and jargon, right? But believe it or not, this single image is telling us a really interesting story about where this stock has been and, more importantly, where it might be headed next.
With any kind of analysis, I think it's always best to just start with the bottom line. So let's cut right to the chase and see what this chart's main conclusion is.
And there it is, right at the top. The big number one takeaway is positive. So for the medium term, we're talking the next 1 to 6 months, the overall outlook is good. That's the headline of our story.
But, every good story needs a little bit of a plot twist. And if we dig just a little deeper here, we're going to find a conflicting signal, something that adds a really interesting layer of complexity to the whole thing.
So that's the real question, isn't it? Is it all just sunshine and rainbows? Or is there a little warning sign hiding in the short term that we really need to pay attention to? And here's the central puzzle. The medium-term forecast is positive, but at the exact same time, we're seeing a negative signal in the short term. So how can both of those things be true? Let's dig in and find out. To solve this puzzle, we have to start with the good news. Let's look at all the bullish signals. What are the specific things in this chart that are making these analysts so optimistic? Okay, so the first big positive signal is something called a horizontal trend channel. The best way to think about this is like a coiled spring. For a while, the stock has just been trading sideways, kind of bouncing between two prices, building up tension, and now it looks like it's ready to release all that energy. And boom, here's the breakout. After all that time trading sideways, the stock has finally burst through the top of that channel. This is a classic, textbook bullish signal, and it suggests that a whole new upward trend could be starting. Now, the second bullish signal is something called positive volume balance. This is basically a way to measure market enthusiasm. It tells us whether the big players, the institutional investors, are actually buying into this new trend. And this chart shows you exactly what we're talking about. Look at that. On days when the price goes up, we see a ton of trading activity. But on the days the price goes down, the volume is really low. This is a huge clue that the buyers are firmly in control.
And hey, don't just take my word for it. The source analysis says this pattern strengthens the stock. So it's not just that the price is going up, it's that the market has real conviction behind that move. And that is a powerful confirmation of a bullish trend. Okay, so we've got two really strong bullish signals on our side. But what about that short-term warning we mentioned? This is where we have to step back and see how analysts weigh all the evidence to come to their final conclusion. All right, so here's our complication. The price has just broken through what's called a support level. You can think of a support level like a floor or a safety net for the stock price. And that net just got a little tear in it. This is a bearish signal, and it definitely suggests some short-term weakness. And this is where the science of analysis becomes a little bit of an art. You've got this powerful, long-term bullish signal going up against a weaker, short-term bearish signal. The big question is, which one is more important? Which one tells the real story? The analysis even gives us a key number to watch, 400. You can think of this as the next major line in the sand. It's a stronger support level that could, potentially, stop any further dips. So, after weighing everything, what's the final verdict? Well, the analysts have decided that the long-term breakout is the real story here. That short-term dip is seen as just a little bump in the road. And that's why, ultimately, the stock is assessed as technically positive for the medium-long term. So that's the story of this one chart. But what can the rest of us learn from this? Let's zoom out from this single stock and look at the bigger lessons here. It really boils down to 4 key takeaways. First, you have to learn to tell the difference between the major trend and the short-term noise. Second, always remember that volume confirms price. It tells you if the move is real. Third, analysis is always a balancing act. You're weighing the good against the bad. And finally, context is everything. A signal can mean one thing in the short term and something totally different in the long term. And that really brings us to the million-dollar question, doesn't it? When you see a small dip, how do you know if it's a real warning sign or if it's just noise? Well, figuring that out is the core challenge of technical analysis. And honestly, it's what separates the pros from the amateurs.